Hey everybody, Raza Khan here. Thank you so much for joining us today at Qila Capital's exclusive webinar on the One Big Beautiful Bill. Very happy to have you here, and I'm excited to talk about this topic because there's been a lot of demand for this, and there's a lot of investors who are very keen on maximizing their tax strategies and minimizing their tax liabilities. So we've put this topic together because there's a lot going on. Okay. So we're waiting for people to trickle in and people are joining as we can see. Thank you so much for dialing in, everybody. Welcome, welcome, welcome. We're gonna kick it off in exactly 2 minutes. I'm gonna put myself on mute and turn off the video and I'll be back and it's 2:02 right now, Central Time. We're gonna start at 2:05 in exactly 3 minutes, okay? So see you in 3 minutes. Welcome back, everybody. Very excited to have you on board here for our Sunday session. We don't really do this very often on the weekends, but sometimes, people are busy during the week, and we just like to have an alternative option for our audience and our investors. So, if you don't know me already, welcome. My name is Raza Khan. I am the Chief Investment Officer here at Qila Capital. It's a beautiful day here in San Antonio, Texas. We had some thunderstorms and some rain over the weekend, and the heat has settled, and it's very pleasant outside. So we're very excited and happy to have you here with us today. Today's topic is a very unique topic that we don't do very often, but it is by popular demand. And the topic is the One Big Beautiful Bill, an exclusive inside look into this new legislation. And also there has been another legislative change recently. So I'm going to share my screen and I'm going to talk about it. This is not a deep dive. This is more of a high level view because a lot of our investors are very keen on maximizing their tax strategy and minimizing their tax liability. So there have been some significant changes that you should be aware of. And I'm gonna share my screen in a moment and we will walk through everything together. Okay, sharing my screen. If you can hear me okay, can you please raise your hand? There's a little button there at the bottom, raise hand. If you're dialing in from your phone, there should be a button as well. This way I know that the sound is working properly, and I will share my screen as well. If you can tell me if you can see my screen also. So are we looking okay? Can you hear me? Hello? Sounds good. Okay. I am seeing some hands, which means great. We'll kick it off. Thank you so much for your participation. And we're very happy to have you here and join us and learn a little bit more about us. Okay, so before we kick it off, I just want to have a little disclaimer statement here. We're not financial advisors. We are not chartered accountants, CPAs. We are a company that operates under the 506C Regulation D exemption of the Securities and Exchange Commission, which means that we can only solicit our investments to accredited investors only. And if you're an accredited investor, you'll know what it is. It's you need to have a household income of 300,000 or an individual income of 200,000 or a net worth of $1 million. Okay. So that's it. This is not financial advice. This is just a commentary on what's happening effectively. So the agenda is pretty straightforward. We're going to do a presentation for about 20 to 25 minutes. We're going to talk about what's going on with the legislation and the executive order, how we got here, and then the Aloft Hotel, which is our current opportunity and how you can take advantage of that. And there's going to be a Q&A at the end, which you can also look into and you can participate in if you have any questions. So before we talk about what we're doing here, our company, it's called Qila Capital. The word Qila in many Eastern languages means fort or fortification. Okay. So what that means is that kind of summarizes our philosophy when it comes to capital preservation. We are an asset management company based out of San Antonio, Texas. We have, about 110 million dollars in assets under management, which includes two different asset classes, healthcare and hospitality. We love both of these asset classes because we believe that they're recession resilient, and the demand is higher than ever for both healthcare and for hospitality, for multiple reasons, which we'll talk about a little bit later. So we're not going to talk too much about ourselves here today. I'll be sending out the slide, this pitch deck after. So if you want to read a little bit about who we are, please take a look at it. So let's talk about how we got here. So, traditionally the financial markets are one of the only industries that have yet been disrupted. I mean, there has been some disruption in the last 5, 10 years. Traditionally, there has been a 60-40 portfolio, stock and bond portfolio. That was the gold standard for all investors. And the yield was very mediocre, right? In stocks have done relatively well, but obviously, they're prone to market shocks, macroeconomic shocks. But traditionally speaking, the access to alternative investments has been very different for accredited investors and for people that have some savings, some wealth. This is more so about the executive order, but in terms of the other, the one big beautiful bill, so that is a big game changer, which we'll be talking about today. So during the Trump 1.0 administration, there was a legislation which he had passed, which was the Secure Acts. And there was a lot of there were a lot of changes, tax cuts, tax exemptions, credits in different ways, and then they were kind of sunsetted during the Biden administration. And then now that Trump is back, he calls it the gold standard or his landmark legislation, which is the one big beautiful bill. All right. So there have been a lot of big changes that have happened for accredited investors and for W-2 employees in the one big beautiful bill. Again, we're not experts. We're not CPAs. We're not financial analysts. This is just commentary that we've done. We've actually written a book on this, not exactly a book, but a guide. We've written a guide or a report on this topic. if you're new to us, if you're new to our brand and you recently opted into our marketing, you may not have received it, but I'll be definitely sharing that during this call or during this webinar today. So there are a lot of significant changes that have happened with the one big beautiful bill. So there are tax cuts, there are for W-2 employees and for accredited investors. So for employees, obviously it's expanding accessibility and flexibility. All right. So for auto enrollment, for example, for the 401k, the Trump administration wants more access to the markets. As a matter of fact, they've just announced a week ago, I believe, that there's going to be a MAGA account for all children that are born during the Trump administration. I'm not sure if anyone's heard about this, but all babies that are born, they're going to have $1,000 that are going to be placed into an account, and that account is going to be subscribing to the stock market, effectively the entire stock market performance, and parents will be able to contribute to that. And as the child gets older, when they turn 18, they can access that. And the idea is that it's going to be a significant amount of savings that the kids can use for a down payment or for college, whatever. So there's a big focus on making making people access the markets more, take advantage of tax cuts. We're not really talking too much about the exact changes, and I'll be obviously, because we're not CPAs and we don't want to comment too much on what's happening in terms of the tax law. But there are a lot of unique features. So there's tax cuts for W-2 employees. If you're in a certain bracket, then there are tax reductions. There are also other unique features like the auto enrollment for the 401k, the student loan matching. So employers can now match an employee's student loan payment with a 401k contribution. And then there's a new super catch up starting in 2025. Employees age 60 to 63 can contribute even more to their 401k. And then emergency savings, create new penalty free pension linked emergency savings account up to $2,500, which is not a lot, but these things add up. For accredited investors, there are some unique uh, features in the one big beautiful bill. So, for example, most non-spouse beneficiaries can now inherit an IRA within 10 years. Um, and there's a new Roth mandate for high earners starting in 2026. If you earn more than 145,000, you can make a catch-up contribution after tax to your Roth IRA. The theme is that the Trump administration has a focus on more flexibility, more access, to give people more savings and to be taken advantage of to take advantage of the performance of the stock market and the economy, so to speak. There are some tax cuts and tax credits that have also been implemented. We're not going to be talking about that because I don't want to comment on specific tax legislation because I'm not licensed to do so. However, I can share the guide with you, which we've written, and you will be able to see that. It's very short. It's not a big book. It's everything is in bullet points, which you can access. Another interesting thing that just happened recently is a new executive order that has been passed about a couple of months ago, as you can see on August 7th, which is called Democratizing Access to Alternative Assets for 401k investors. Now, this is a big game changer, and it helps people like us significantly, but it helps people like you because now you can use your 401k to invest in alternative investments. This was very challenging in the past. You had to roll it over to your 401k, to your IRA. And then through the IRA, you were able to invest in different investments, alternative investments. But now this is a huge difference, a huge change. You can use your 401k now. The executive order effectively directs the Department of Labor to re-examine rules and reduce barriers to litigation, with the stated goal that 401k participants can now invest in private equity, private credit, real estate, infrastructure, digital assets, and commodities. Okay. However, we obviously recommend that you don't invest in some of these other risky ones. Of course, it's much better to stick with something that's proven, tried and tested and proven, like real estate. Okay. So this is the book or the guide that we've written. It's called a One Big Beautiful Report. It was written in July when the One Big Beautiful Bill came out. I believe we were one of the first people to do it as an asset management company. There were a lot of chartered accountants, CPA firms, and law firms, and financial firms that were doing it. But we were one of the first asset management companies to comment on this. And we've written it. It's a white paper, and I'd be happy to send this over. As a matter of fact, everybody who's attended the webinar today, I will be sending it over so you can, read it and see what we're talking about. This one is a lot more detailed. It talks about everything you want to know that may affect you as an accredited investor or a high income W-2 earner, how the new tax laws affect you, so to speak. And like I said, there are many things that have happened recently. Things are always changing. I don't know how many hundreds of executive orders he's already signed, uh, President Trump, but there are a lot of big changes that are happening. So why are we here to talk about this, and why are we commenting on these legislative changes? We're an asset management company that effectively invests in alternative asset classes like hospitality. And that's what we're talking about right now. Today, our current raise is the Aloft Hotel, which you may have seen and heard about when you subscribe to our marketing channels. What makes us unique and what gives us the ability to work with accredited investors? So first of all, we have a proven track record. We've been around for a while, and we've been in this industry for a long time when it comes to asset management. We have over $100 million in assets under management, and our hotels, they perform really well. So it's not just about having deals under your belt, but it's about having winners under your belt, and we've had that we have that track record. There are three partners in the firm. They all bring different approaches or different lenses, different views to the team, different experiences. Number two, proven strategy. So we only acquire assets that perform on day one. We have a very specific criteria. So there's no extensive risk taking involved. We don't like to build anything from scratch. We believe that there's a lot of risk involved when it comes to cost of materials and cost of labor, especially right now with all the ICE raids that are happening, and the labor market specifically in construction is shrinking. That means the cost is going up. We don't deal with that anyway, because why bother when you can acquire something that's already operational like this Aloft Hotel? Okay. The other big landmark strategy that we have is cash flow first. If something doesn't cash flow on day one, what makes us dream or promise our investors that it's going to cash flow later on? Sure, there are a lot of other fund managers that do that, but that's their strategy. For us, we want to acquire something that's already operational and cash flowing so we can pay our investors right away. And as they say, cash is king. A dollar today is better than $2 tomorrow. That's what we believe. And we'll show you that in a moment. Okay. And we take advantage of this strategy because hospitality is a booming sector. There's growing demand. Okay. There are a lot of new trends in the market, which we'll talk about in a moment. Number three, investor first approach. Everything we've done in our fund is to favor the investor. So we're not the way we've designed our offering is very unique. It's very disruptive because no other fund managers are doing what we're doing. We're not charging any fees of any kind, which in this business is an anomaly. Most fund managers today, they have there's some sort of fees baked into the fund. There's an acquisition fee, there's a property management fee, or asset management fee. There's a disposition or exit fee, there's a development fee, there's an accounting administration fee. There's 5 or 6 different types of fees that the fund managers can pull from, but we have none, no fees of any kind. It's a pure partnership model where investors get paid first because they're putting up the capital. We're doing all the heavy lifting. So if we're able to take the asset to the performance that we are targeting, only then do we earn and we make money. But investors make money on day one. That's the beauty. And then there's other things that we've done, like the discounts, for example, which are very significant and very, very intriguing, and people ask us how it's possible. I will be showing you that in a moment, how it's possible. And innovation, number four, innovation driven. So our investments are fully self-directed. There's a portal that you can go to and you can see everything there. There's full transparency. Also, our fund is administered by a third party. So we are responsible for the asset management and overseeing the asset strategy, the hotel strategy, but all the accounting and all that stuff and appraisals, everything is done by independent third parties. This way, there is a clear separation of power, in the fund. Investors get favored. Okay. This is what our team looks like. There's three partners. Our CEO, Kuldeep Gyani, he's a very experienced and very successful operator and entrepreneur. And then Dr. Pareen Shah, who's our chief medical officer. People ask us why we have a chief medical officer, because we have half of our portfolio, more than half of our portfolio is healthcare. So he oversees the healthcare. He's a doctor. He loves what he loves that, and that's what he oversees. And then there's myself. I'm the chief investment officer. I do look more handsome in that picture, but that's how it is. Pictures, often bring out our better sides, or they're supposed to at least. But my role is to oversee the fund and deal with investors and show them our strategy and everything we do. I come from the world of fund management. I used to be a vice president of a big fund based out of Florida before, where I managed a portfolio of 17 properties. Okay. So we're not going to go into the specific biographies because you can review that when I send you the pitch deck. I talked about how our portfolio is consisting of two different asset classes, healthcare and hospitality. So South Texas is where we're primarily located and we're focused on. We love South Texas because this area right here is often overlooked by most people. Everybody flocks to Dallas or Austin or Houston. We like to be in the San Antonio and South area. Sometimes, once in a while, if there's a really good opportunity, we'll go up or to the east a little bit, but primarily the border is and San Antonio is where we're focused, and we've done really well because there's low competition there. This is what our portfolio currently looks like. We have the Laredo Emergency Room, which is valued by an independent third party at $47 million. It's amazing. It's a cash cow. The Staybridge Hotel, which is also a cash cow, does really, really well. And this is a successful case study in what a good hotel operation or a good hotel management should look like. And this is, I'd be happy to share that with you on a one-on-one call, walk through the fundamentals. This is our Marriott property. It's a courtyard located in San Antonio. It's actually undergoing the stabilization process right now. It's not quite where the Staybridge is right now. This one does over $6 million in revenue a year, and it performs phenomenally. This one is not quite there yet, but it's getting there slowly. These are some of the other properties in our portfolio and some other assets. Some of them are businesses like the Optimal Wellness and Recovery Spa, and then the McAllen Emergency Room, another emergency room. We're in the process of building a ground up development in Brownsville. This is the only time we're doing it because it's an ER and it's going to be our ER. That's how we're doing it. But let's talk about the opportunity now because we are getting to that time limit. So we are in the midst of acquiring a property, an Aloft Hotel in San Antonio at the San Antonio airport. Okay. It's a fantastic opportunity because the fundamentals are superb. It's a property that is already operational. It does really well on its own. It did $4.2 million, just shy of $4.2 million in revenue last year, and it's on track to do a good number this year as well, more than it did last year. And it was built in 2009. It's already operational, like I said, 141 rooms. And it's an airport hotel at the San Antonio airport. San Antonio is the seventh largest city in the nation. People don't realize that. It's also the largest military city in the country, after the Pentagon, of course. It's actually known as Military City, USA. So there are five major military bases here. It's the primary location for the Air Force, for example. So there's a huge demand from the Department of Defense, or Department of War, as they now call it, in San Antonio. And the San Antonio airport is undergoing a $2 billion expansion right now, which is something people also don't know. They're building a brand new terminal just because there's so much travel demand here and it's doing really well. And the location is fantastic. It's 5 minutes away from the airport. Okay, here it is right here. That's the airport. This is the hotel, and it's right next to a big mall, the Park North Mall, and the North Star Mall is down the street as well. It's just a great location. If you've received an email from us with the drone footage, please take a look at that because it'll show you a zoom out view of what the area looks like and how busy it is. It's maybe 100 yards, 200 yards from the highway exit. That's how close it is. So fantastic location. Now, in terms of the investment options, what I was talking about innovation earlier. So we are changing the way people invest. So traditionally, there has been a long-term investment option. With us, there are two different investment options that you can choose from. There's a growth fund, which is a 5 year option, and then there's an income note, which is a 2 year option. The growth fund gives you an ability to earn dividends and receive profit sharing at any liquidity event like a refinance or sale. When we increase the value of the property, effectively the capital gains. It allows you to take advantage of the capital gains. The income note is a little bit different. It gives you a pure cash flow distribution, which is a little bit higher. It's 10% coupon payment, but there's no profit sharing. In the growth fund, there's an 8% preferred distribution plus profit sharing up to $500,000 in investment. Over $500,000 in investment, it's a 10% preferred distribution plus profit sharing. Okay. Now, a couple of interesting things to note. All investors who invest $100,000 or more receive hotel discounts. They get the Marriott benefit. If you're a frequent traveler, this is a game changer. Just the discounts that you'll be receiving through your traveling are so significant that it'll make it worth it for you. Even if you did not get any distribution, obviously, I'm not saying this is not going to happen. The hotel is profitable. You will get a distribution in the first quarter, but the discounts alone make the investment worth it. Okay, which I'll show you in a moment. Another interesting thing to note, if you are a high net worth individual and you have significant savings set aside, it is a good time to hedge your bets right now. I'm not a financial analyst. I don't have a crystal ball. What I've noticed is that there is a lot of over speculation and a lot of overvaluation in the stock market, specifically in the AI technology space. Okay. There's a bit of a bubble going on. So if you're heavily invested in the stock market, now's the time to hedge your bets, take some off the table, and put it in something reliable and something safe, like this hotel, which we're getting. By the way, I did not mention this in the earlier slide just because I'm going really fast, but this hotel, we're getting it way below market value and we're getting it way below replacement cost. Okay. And it's already churning a profit and it's already churning a very healthy revenue. And we're going to do it even better with our strategy. So it's a good way to hedge your bets. Another thing worth mentioning is all investors who are interested in investing $500,000 or more will receive a personal guarantee from us that you will not receive a single dollar of your investment. We have a sizable portfolio of our own. I'm not that rich, but my partners are. They've done really well for themselves, and they will be providing a personal guarantee to all investors over $500,000 in investment in the fund. Okay. Another way we're giving value to our investors. Let's talk about what the discounts look like because this is a frequently asked question and it's very exciting and I love talking about this. So this example was pulled back in September. I haven't updated it since, but it doesn't change anything. This is one of the most beautiful properties in the United States, in my opinion. It's a Ritz-Carlton Laguna Niguel in California, overlooking the Pacific Beach in Orange County. It's a very expensive hotel if you're booking the standard rate. As you can see, $1,172 a night. Okay. With the discount that you receive through us, which is the Marriott MMP rate, Explore rate. If you're a Bonvoy member, if you go to your Bonvoy app and you're booking your hotel room, it'll give you an option of booking using a special code. This is one of the codes that you can use, and it gives you a significant discount. As you can see, it's almost 75% off the base stay. 281 bucks a night. Absolutely amazing. Another example, New York City, Times Square, the W Hotel. Standard rate, $453 a night. With the discount, $257 a night. Okay. It obviously varies based on demand, supply and demand, and availability of the hotel. But if you book right, and if you're a smart planner and a smart traveler, if you book well in advance, you will be able to take advantage of superb rates. Another example, London, United Kingdom, Marriott County Hall. Okay. 542 pounds a night is a standard rate. With the discount, $133, 133 pounds a night. This one is 613 GBP. With the discount, it's 133. So this one's even better than that one. As you can see, another significant discount. So a little summary of what we talked about the offering. So this is for accredited investors only. All right. Everything is self-directed. What I'm going to do is I'm going to drop my calendar link in the call right now. And at this point, we're going to kick off the Q&A. If you have any questions, please type your questions in the Q&A box below, and I'd be happy to answer them. And if I cannot answer them, I'll get back to you. But generally speaking, I do have the answers. What I'll do is I will drop my calendar link below so you can see, you can schedule a call with me directly. Discovery.qilacapital.com. Discovery.qilacapital.com. This is the link to my calendar, and you can schedule a call with me directly, and I can talk, I can tell you whatever you want to know about the opportunity. If you want me to get into the specifics of the hotel acquisition, if you want to walk through the numbers, the finances, we're able to do that. We encourage all our investors to talk to their CPA and talk to their financial advisor. And because we don't know each other that well, this is the start of a new relationship, and we'll be in business for a long time together. We encourage you to start small. You don't have to start with a significant amount of money. You can start with something small, like 100,000, for example, which gets you the discount, the Marriott Bonvoy discount. So please, if you have any questions, type them in the Q&A box below, and I am happy to answer your questions. About the One Big Beautiful Bill, I will be sending you a copy of the report, the One Big Beautiful report, after this call, along with the webinar replay and the pitch deck and anything else that you may need. So we'll go from there. So if there are no questions, it appears that I did a really thorough presentation because I did not get any, I'm not getting any questions. So that's great. That is good to know. I usually did, this call did go a little bit longer. I apologize if I took too much of your time. I like to wrap it up within 30 minutes. Today, I think we did 35 minutes, something like that. But the Q&A is wide open. I am here. If you have any questions, please let us know. We can talk about the benefits. We can talk about the investment. We can talk about the hotel. We can talk about our track record, whatever you like. I have a question. Great. Finally. So I have a question, and the question is how does the MMP, the Bonvoy discount work? Okay, very simple. So the way the discount works is it's all done through the Marriott Bonvoy system. And when you are scheduling your stay, when you're booking your stay on the Bonvoy app, you can simply go to the website. You can use the Bonvoy app on your phone, or you can go to Marriott.com and log in and select the property that you like and your dates. And then you just click the button that says Explore MMP rate, and then you book that rate, you pay with your card. When you're checking in, you will be asked to provide a proof that a letter confirming that you're eligible for the discount. We have someone on our team. Her name is Priti Gyani. She is the expert on travel. She travels a lot herself, and she handles the entire database of investors and the benefits. So every 2 months, she will be issuing you a letter that you can use, and you just show that letter upon checking in. You could just print it out once and leave it in your bag, or have it on your phone and just show it to them, and that's it. You get the discounts that way. Another question we have is, do you do any other hotels aside from Marriott? We have three hotels in our portfolio currently. So we have a Marriott, we have an IHG, the Staybridge. The IHG is the Intercontinental Hotel Group, and we have another hotel which is being converted into a Hyatt right now. Hyatt Suites, actually one of the first in North America. And that one is the Hyatt program. So we have three. We don't have a Hilton yet, and we will, it all depends on market opportunity. But in the future, we will be bringing other opportunities to the table, whether it's a Marriott or Hilton, whatever cash flows the best and whatever works the best for our investors. It's not about just about, fancy brand. For us, it's about cash flow and, a flagship brand, a premium brand that delivers cash flow and value to our investors. And interestingly enough, I didn't talk about this on this specific webinar, but I've talked about it before. The discount brands, they perform better than the full service brands, like the restaurants and the ones with the food and beverage. Okay. So yes, that is the other question. Okay, another question we have is, are there codes for Hyatt and IHG discounts? Um, we don't have the ability to grant codes on the Hyatt platform yet because it is a new conversion. It has not gone online yet. It is still an extended stay hotel, but in the future, once that happens, we will be extending it to some of our investors that have invested a good amount of capital with us and those that have been with us for a while. IHG, we are trying to figure it out. It's a little bit more harder. The Bonvoy is the easiest platform for us and for, just the way they've structured it. Uh, we are trying to figure out a way to extend IHG discounts to investors who are in the Class A share class, which is $500,000 or more. So we are working on it. It's not done yet. It's not as easy, but we are trying to figure it out. But the Marriott discount we can confidently extend. And another interesting thing is that Marriott is the most prominent hotel brand in the world. There's 10,000 properties around the world. I believe Hilton is number two. It's got 7,000 properties, and then IHG and Hyatt are you keep going down the ladder. But uh, Bonvoy is the best program because they have the most properties and the most diverse range, from budget to ultra high end, like the Ritz-Carlton or the JW Marriott, for example. Any other questions? Okay, so it appears that there are no other questions. If you do have any other questions, please email me or text me. I will drop my contact information in the chat as well. And this is my direct phone number. So you may be getting text messages from our marketing team. That is a number that we share. It's a marketing number, but this is my direct cell number, and you can call me or text me, and I'd be happy to answer any of your questions. With that said, I will conclude the call because we are going over the allotted time. So thank you so much for joining, and I hope you got some value out of this call. I know we didn't go as deep into the one big beautiful bill, but I am sending you the report to make up for it. And I'd be happy to hear from you, and we'd be happy to have you on board. So thank you so much once again. Have a beautiful Monday or Sunday. I'm already looking forward to Monday. That's great. Have a beautiful Sunday and enjoy the rest of your week. Thank you. Have a lovely day. Talk to you soon. Bye bye.